And we're not live. All right, jkhy. That stands for Jack Henry and Associates Inc. That showed up in the US stock screeners from stageanalysis.net. Keep going back to the pool, getting a fish out of the water and checking it out. All right, monthly candle chart defining. Where's my monthly defined support, resistance? And guys, this is a perfect example of your software, the chart. It has to start with a low point, tries to fit everything, high point. And you could say, hey, this could only go down, Pat. Look, it's so high. That is how you need that emotional management technique to know that you don't care. You have to back it up and try to put that price action in the middle and create that black space above and front and backwards and just concentrate on that. All right, let's start identifying the support. Ooh, look at that. The resistance, we're just above it. Use your software to its full advantage. Zoom in. Don't be afraid. It's free. Just to make sure. And yeah, it's above. So right now we have the close 124.66. So about 124.60 is our breakout line. Breakdown line is 117.30. There you go. That's just about that area. That's what we're dealing with here. What's the implied measure move? 1, 2, 3, 4, 5 month consolidation. And this would be our measure move. Right up here. Target considerations, zero overhead resistance, or there zero wall, previous support and resistance, or resistance and support, nada. So that's what it looks like, guys, for here. There you go. Make these candles fat. And there's always a case for a breakdown. But since the candle price action is closer or above the breakout line, this scenario is not in the cards right now. Guys, this is the close. This candle will be closed. This is the last day of March. May. Is that convincing enough? It should be. Wow. 125.06. Damn. It's not above that round number. I would have liked, usually it's like, I would have liked it to be more convincing above here. Really to get that, okay, I'm breaking out. I'm above that resistance. Now this is razor thin. All right, let's jot down to the weekly to apply Stan Weinstein stage analysis. All right. Wow, that is a mighty stage 2. But the trader's way, you see, would have been triggered out a few times. Any breach of the 30-week moving average and the trader's out. But that's all right. You're out. If ever price comes back in, and after that, you have another takeoff pattern, and with the volume, then you get back in. Remember, you draw your trend lines, exit half your position when it's violated. The other half when either you hit your sell stop that you moved up or below 30-week moving average. And that is covered in detail in my early Secretwars episodes, the long ones, 28, 30-minute ones there, where I kept talking and talking. Guys, I had to do it. I had to refresh myself with the concept. I had to reread the book and go around the net getting answers. And that's how you learn. All right. Let's see what we are today. Okay, we're above the Ichimoku cloud. The green cloud, that means we're still in an uptrend. There's no red cloud above us, no overhead resistance. So adios, Ichimoku cloud. See ya. All right. These are the levels I put for the monthly defined resistance breakout line. And remove all trend lines. So 2460 was our monthly defined breakout line. This is a classic stand. I don't know who had to bring up the picture. And you often send stands as a breakout. And after that, the price action goes sideways, comes and touches a 30-week moving average, and then goes upwards. Is this ideal place to re-enter as a trader? What are we missing, guys? What are we missing? We need that volume candle. Here's a weekly defined resistance. And here would be our pattern. Remember, bigger patterns, sometimes there's smaller patterns within that. Sometimes they share the same line, the same support line. Sometimes they don't. Sometimes you have just patterns that are within a bigger pattern and their target either reaches the upper boundary of the bigger pattern, could slow down through it, or goes through to reach its implied measure move. You have to consider all these things. Any previously defined resistance is potential turbulence for a pullback. It's all good. If you have your breakout on twice the average volume of the previous 4 weeks, then you could get on the breakout, wait for a pullback on that resistance. And if it's on low volume, the pullback, then you have a chance to re-enter when the price action comes back to your breakout line, touches it. If you're really patient, you wait for a hammer or a doji. And then after that, if the next candle's green, then it confirms that the pullback has been complete. It's not a reversal. And the contracting volume is your ultimate confidence builder to get in there. It's your chance for riches. I'm just kidding. Shouldn't use any words. Fear, greed, riches, I like, I hate. All these emotional attached words, try not to use it. I don't like a chart setup. I guess you can't say that, but should try to be more like robots. Like, that's a setup that could go upwards. That's a setup that is breaking out. But try not to say the word I like it. I'm trying. It's hard. But the word bear and bull, I'm really practicing never to say that. Bearish, it's bullish. If you see people react to that and they're right now, when you see human reaction, that means it's emotion. And emotion is just slippery slope down that, getting human biases in, emotional biases in your decision making. And it's just chances to thread away to get yourself away from your framework, which is scientific, right? It's binary framework. Above resistance, volume, RSI or Mansfield if you have it, going up. Above a horizontal breakout line, 30-week moving average up. That's like mechanic. The more it's mechanic, the better it is. And human behavior, be what it be, we keep looking for emotion, or we react very emotionally to a whole bunch of stuff. So just be aware of that and try to not use those emotionally charged words, guys. So what do I do with jkhy? 2460, the close above, not super convincing. Tomorrow's Friday, so when this is posted, Friday morning, you'll have, you could wait for that weekly candle to see if it really closes up. I know the month is done, but this candle could go up, and then you'll just have the beginning of the June candle, monthly candle added on the other side. And then I guess you could enter. But right now it's kind of too close on the monthly to really scream out breakout. And on the weekly, it's really setting up for a perfect continuation breakout. We'll see what happens this week. The volume's just not there. Really not there. Just have to wait. Could be this week, next week. Maybe the monthly candle that breaks out is going to be more convincing, and we'll have a monthly candle. Let's go back. Fast. Maybe we're going to have a better candle like goes up here. Really convincing. And then after that, that'll confirm the wind, the direction of the wind, direction of the trend, which will protect us from being triggered out. I'll correct anything. I'll help you correct the stocks pulling back. Then it won't be a reversal. Have more chance of being a pullback if you have the monthly trend behind you. If you don't have the monthly trend behind you, then pullbacks could occur on higher volume, could actually not be pullbacks. They'll bust through your support, and they're actually reversals going down to your target, to your sell stop, triggering you out, and then you just have to wait for the chart to morph, candles added, and see what you're dealing with there. The trick is to find reasons not to enter a trade. Always look at a trade and always try to find reasons. Apply your framework. Don't deviate from it. Don't try to stretch it. If you stretch it to try to fit the trade because you're really itching to trade, I could fit it, lower my sell stop. That's enough volume. As soon as you're doing those things, that's emotion. Stop. Close your trading software. Go play outside. Go run. Go do something. Get away from that trigger, that buy. And you'll be better for it. There's always other A++ setups. Keep that bullet for a setup where you're not even, it's just screaming at you. Buy. Got the volume, got the RSI going up through halfway territory, horizontal breakout line. It's simple. Close your software. When in doubt, close the software, walk away. That's it. Job done. Go do something else. It'll save you from a whole bunch of pain. And after that, running for Hail Mary trades. All right, jkhy. I'm going to wait till tomorrow's close. Keep that chart open. I have a whole bunch of alerts. They're free, man. Bam, bam. They're all good. And see where that price action goes. Very close. Very close to something. It's building up nice. Just not quite there yet. All right. See ya. Ciao.